What up, HyperChange? Welcome to episode 12 of G to a Milli, where I open source building my investment portfolio, scheming with y'all, showing you my every move. It's a big day. We hit 50 G's in the portfolio. Let's go. So portfolio has been ripping. I'll show you what I'm looking at now. Tesla stock has been pumping. We're up 114% there. Still the number one position in the fund, about 64% of my portfolio. Bitcoin about 34%, up 12% there. Been holding on, like that position, about $16,000 there. Then the new one is Lemonade. This is a big one. Lemonade ripping today. I'm up 8% about in that position. Tiny toe in the water position in Lemonade. So for those who saw my last one, I had BNMR and Coinbase, sold BNMR for $55.93, only lost 10%, let's go. And then I sold my Coinbase for a tiny little profit, rolled it all into Lemonade. And so now I have this new portfolio streamlined here, about 50 G's, Tesla, Bitcoin, and Lemonade. Just to show you the stats, G to a Milli stats here, I keep all my, if I would have invested in the S&P, I'd be up 23.2%. I'm up about 77% with my strategy, so beating the S&P for now, let's go. But always shout out to the S&P, it's awesome. So I keep all my stats here, and I'll share this if anyone wants to see it for the challenge. But anyway, let's talk about Lemonade. So Lemonade, very interesting company, and I made this kind of like viral tweet that was like, I don't know what to invest in, and everyone hit me back with all these ideas. And I've noticed throughout the years that certain companies bubble up with amazing retail shareholder communities. It's Robinhood, it's Palantir, it's Hims, kind of the second wave after Tesla. And I love seeing these retail-led shareholder communities on the internet bubble up. Lemonade is one that just keeps knocking on my door. I keep hearing about Lemonade, ton of ex-Tesla investors. Shout out, y'all know who you are. I see you on X, you're commenting on my post. I love all the scheming and just idea flow that's been happening there. So thank you for helping me learn about Lemonade. Lemonade's got a big community, and they're repping, and they're trying to get me to join. They have amazing research. They've been following the company. They've been crushing it. Lemonade had a ripping IPO, popped like 150 a share, went down in the dumps to like $8 a share. Now it's back at 50. Company's on fire. They're crushing it. So I've been dabbling with it. At first I was like, I don't like Lemonade. I use them for renter's insurance, but I don't like insurance. The more and more I've been looking at it though, you have an owner, operator, founder, CEO, only a $4 or $5 billion company, disrupting huge legacy players in insurance with an AI play where operating expenses, as you can see here, operating expenses stay flat, where their business is growing, massive operating leverage led by AI, amazing brand. Then I did my own research with Lemonade. And this is going to seem so dumb and simple, but the number one thing I look at, are you compounding revenue per share? Are you compounding revenue growth over time? Revenue is like the value you put out in the world, and what you get back for it is revenue. And so revenue is the most important, or I would say the first place to look when you're analyzing the financial statements. The first thing I see about Lemonade is this is a company that has been able to compound revenue growth super consistently. They're always putting up record revenue. Here, you can look at it. They had one little blip here, but overall, in the long term, always putting up record revenue, compounded revenue from 26 million in 2019 to over 600 million in the past 12 months. Just consistently, every single year, record revenue and growth. Then if you look at their gross profit, that's grown at an even faster rate. Their operating income, which is still at a loss, looks like it's about to turn positive now, as the company's was losing more than all of their revenue and operating income. Now, in 2022, those 12 months, they lost 270 million on 171 million in revenue. The last 12 months, they only lost 200 million, but they gained 600 million in revenue. So the profit, so forget all the hype, forget all the buzz, forget what people are saying. The SEC filings in the GAAP financial audited data is showing me this company is growing revenue and compounding like crazy. They're minimizing their losses. Their gross profit's growing. Everything is trending in the right direction. They're on the cusp of turning profitable. That's why I like this company. You have the owner, operator, founder. You have the AI story. You have the numbers backing it up. We're at the inflection point where they go profitable. $4 to $5 billion market cap company disrupting $100 billion plus industry. I love it. I love it. So one of my new mantras is slow like a turtle. So I'm going to change my little emoji from a snowflake, snowball homage to Warren Buffett to my turtle, slow like a turtle, brick by brick. That's how I do everything, especially in terms of financial management. Move a little bit in that direction, see if you like it. And you've seen me on this show. I bought a little app, a little Airbnb, a little Rivian, hated it, sold it, Bitminer. Buy a little, it forces you to do homework, forces you to think like an owner, and then go into it more and more as you gain conviction and understanding of the company. So that's what I'm doing with Lemonade. I don't know it well right now. I like what I'm seeing about it. I like the community. So I'm buying a little and I'm starting my research process. Shout out to the Lemonade people who are helping me. I've been scheming with Paper Bag Investor. Might have him on the channel next week to help me do some more research. So stay tuned for that. But that's long story short. I really like the potential of Lemonade. I'm putting my toe in. I'm trying to understand the company. But at the same time, what I think is funny is I love Lemonade, but I can't. There's a few things I don't like about Lemonade. Like their new growth avenues, car insurance. Is that really going to do well in a world where Tesla, Robotaxi, and Waymo take off, and the entire paradigm of what owning a car is changes for the first time in 100 years since we went from the horse to the car, now the car to the self-driving car? Is this a time to bet on car insurance? I'm sure the legacy providers are screwed, but Lemonade, Tesla's insuring themselves, Waymo probably will too. I'm not convinced that's the move. Convince me why I'm wrong, but I'm just not convinced that car insurance is the good, exciting industry. So that's one thing that's holding me back on Lemonade. And is insurance in 10 years, is that what excites me? My whole motto is invest in the future you believe in. Insurance is important. I mean, it's important to have good insurance and communicate with your insurance company well, but is this get me out of bed saying, oh my God, in 10 years, the AI underwriting on Lemonade's insurance is going to be so efficient. They're going to be offering amazing customer service and rates to everybody. I guess that's cool, but it's not. I don't know. So that's what I'm thinking about Lemonade. And it's just part of this broader theme where I can't find anything good to invest in. I'm finding some good private market startup deal flow. But other than that, there's nothing in the public markets. There's no new good companies IPOing, nothing early, nothing exciting, no good new owner operator founders hitting the available pool of people we can invest in the public markets. So I like Lemonade, but I don't know if I love it yet. So we'll see. But it's been a broader symptom of me not having any investment ideas right now, which maybe is a sign the market's a little frothy. I don't like to time macro, but maybe it's a sign if I just can't find anything I'm greedy and hungry and want to buy right now. Nothing looks on sale. Nothing seems like it has a good IRR. Everything seems priced to perfection. That's how my gut feels right now, but I don't know. That's just kind of what I'm thinking about. So I will touch on Tesla, my number one position, obviously. Big fan of Tesla. I think they're crushing it. So, would I go all into Tesla? Maybe. I mean, it's already 64% of the portfolio, but Elon buying $1 billion of stock in the open market, the stock rip into 420. I mean, that's why I'm not getting too hyped on my portfolio right now, because it's important to stay humble, not get too hyped when it goes up, not get too down when it goes down. Hold your conviction. So I think Tesla, did anything change from Tesla from 2 weeks ago when the stock has moved 25%? Not really. So I don't know if this is justified. It's good to have Elon on board, but I think so much of what actually matters with Tesla is this shareholder vote. If Elon, it looks like, if we can get this passed, Elon is fully bought into Tesla. We're going to launch Optimus. We're going to do Cybercab. It's like us signing our number one player, LeBron. We got to do it. This is huge for the team. So if we can re-sign Elon with this pay package and that gets passed with the shareholder vote on November 6th, wow, Tesla is off to the races. I'm so excited about that. So very bullish on Tesla, my number one position still. Bitcoin, my number two position. I look at Bitcoin like cash. It's a store of value. I like it. It's a solid investment, but I'm waiting to have something with higher conviction and I'll move my Bitcoin into that. But for now, I do like the potential of Bitcoin overall, especially as the geopolitical system kind of frays and trust in the dollar maybe goes down because of our debt situation. I just think Bitcoin's importance in the place of a new financial system is more than ever. Same with Ethereum. I know I sold Bitminer and my Coinbase. I don't even hold Ethereum right now in the portfolio, but I'm very bullish on what's happening there. Huge potential to reinvent and build the whole new U.S. financial system on Ethereum. The U.S. has found the biggest new buyer of U.S. debt, which is these Ethereum treasury companies like Circle and Tether. So anyway, I'm getting a little sidetracked, but very interesting stuff is happening in the crypto world, and I'm as bullish as that on that as ever. Now, taking a quick moment to give a huge shout out to our sponsor for this episode that makes this possible. I'm talking about The Rundown. It's a podcast that's out on Spotify or Apple Podcasts, and in less than 10 minutes, you're gonna get all the info you need about the stock market that day, the biggest movers, the biggest news. It's a fun, chill way to catch up on market news. It's The Rundown podcast. I'll put a link in the description below. Go check that out, and a huge shout out to them for sponsoring the show. I mean, give them a follow just for that. Anyway, go check out The Rundown. Last time I said I wanted you guys to give me some questions in the comments on YouTube for G to a Milli. So do that. On this video, if you have a question, put it in the comments on YouTube and I'll try and answer it. Would you rather hold the S&P or NASDAQ long term? I mean, I think the NASDAQ traditionally in the recent years has crushed the S&P, which is pretty interesting. But so I'd maybe go NASDAQ, but I feel like S&P is safer. Lots of good comments on Bitminer and me saying it wrong, Bitmine. I like this one. Galley, sell it all and give it to the poor and find riches in heaven. I like that comment. Could be a good idea. Why do I not talk about XRP? Because I think Ripple is kind of more of a scam. I don't know. I don't really get Ripple. I'm Bitcoin and Ethereum are enough for me. I like those bulk pieces. Ripple, I'm less convinced Ripple's designed to like go up as a token, kind of. Oh, this is a good one. I was going to ask about Robinhood. Their event's coming up in a few weeks with big announcements. They appear to be getting into wealth management. What point would be a good entry? So, this has been killing me because I love Robinhood stock. I was a skeptic of them at first, but I'm not afraid to say I was so wrong. Robinhood has been on fire. Vlad is like crushing it. And I have very big FOMO. Honestly, that I'm not in Robinhood, that I've missed it, especially because they're helping the retail investor. I mean, Robinhood I've been blown away with Vlad kind of getting back into founder mode these past year or two. I mean, this business is on fire. I've been wanting to add it to the G2 a Milli portfolio, but it's always running away from me. Like the stock is like 123 today. It just keeps going higher. I'm not seeing the right risk reward. I've been waiting for a pullback, but I've been waiting since $50 a share. I mean, Robinhood is on fire. I would say one of the best run companies on their way to $1 trillion, on their way to disrupting all of finance. They're going to go head to head with Coinbase eventually to be the new banks of the future. Very bullish on Robinhood. I wish I owned it, but I don't, and I've been stupidly waiting for a pullback. So that's my thoughts on Robinhood. I'll probably continue that scheme going forward. Anyway, that's a good question because now you got me thinking about what would my entry point on Robinhood be. I keep thinking in my head under 100 a share, but I don't know if it'll ever go there since they're S&P inclusion. Anyway, this is HyperChange. You're watching G2 a Milli. Let me know what y'all think in the comments below and leave me some questions for the next episode. Thanks for tuning in. Love y'all. See you next time.